And we are live broadcasting only on onedealaway.com. This is Money Matters. My name is Nev, and today is, well, Sunday. Happy Sunday to you. It's my understanding that some of you might have changed the clock already, and it's a fall back, right? So you rolled your clocks an hour back. I think most of the Europe did that this weekend. So the rest of us here in the U.S. we're lagging behind. Sorry, y'all. But we'll get there. We'll get there as well. So now, if you are working with anybody around the world, make sure you check the clocks before calling them, because what was appropriate yesterday might not be appropriate today, timing wise. So, something for you to know. All right. So, we're not going to be talking about time or clocks or any of that stuff. What are we going to talk about, y'all? Well, we're going to be talking a little bit about crypto, and we're going to be taking a look at a little bit different viewpoints. So we're going to be looking at some on-chain analysis and how Bitcoin, to be specific, is being used now. What is the purpose? You know, when we started way back when, it was, people were talking about it, that it's being used as a currency, and now we're starting to get reports that that's not exactly how it's being used. That is not exactly what its purpose is now becoming and turning into. And we're going to be looking at what are some of the wealthiest of the investors doing. Where are they going today? What are they investing in? And I think that that's going to be a very cool thing to take a look into it. We're also going to be looking at some of the proposals and legislative changes when it comes to investing and crowdfunding. So whether you are a blockchain developer, a company developer, a real estate investor and syndicator, we're going to be looking at what is the new stuff that is happening and coming out of SEC, which is the Securities Exchange Commission, and they basically regulate all of the securities. So anytime you sell a share into the something, just about every time, it falls, or it could very likely fall under the SEC rulings, and you do not want to mess around with the SEC, as we are slowly but surely learning as they're going out and cracking on the individuals and the companies in the crypto space who are not properly filing the regulations. So we're going to be looking at the regulation stuff, and we're also going to be looking at how the wealth is being really managed and stored, look some on-chain analysis. So it should be a really fun show. Let's do this. All right, y'all. Happy Sunday to you. I hope you are doing excellently. So let's go in and let's take a look at the market. I always like to take a look at the market and see what in the world is going on. And then we're going to jump into Bitcoin and kind of really go through these things. So here we go. What can we see? Well, oh no, no. Stop it, CoinGecko. Stop it. All right, let's try this again. What I am seeing a bit of a sea of red more than the green, right? Would you agree with me? So let's see what's going on. Well, Bitcoin seems to kind of hit that 13,000, maybe a little bit up and bounces back down, 13 and down, 13 and down. And we are seeing that kind of happening. ETH is holding over 400, which is quite lovely and exciting. But that's kind of where we are. I mean, you can see that over the 7 days, they have done incredibly well. And this is one of those things that I have been saying that I have been expecting is going to happen. Let's take a look in a new window, new tab, of where we are, and kind of, I have been explaining. Oh no, look at this guy. It almost looks like a Bart, if you ask me. Not exactly, but sorta. 7 days. So you can see what's been happening over the 7 days, and you see kind of how it's starting to go sideways. That's a lovely thing. We want to see the sideways thing. What we don't want to see next is we don't want to see something like this. We don't want to see something like this and then sideways, right? So that's not something that we want to see. Where it would be lovely to see is if we see something like this, where maybe it goes still, maybe sideways, even if it goes a little bit down and stuff, kind of consolidate, go up, come down, and then that would be a nice healthy thing, especially if it just kind of stays. Let me see. Let's use the color that you can see, but we haven't used. Yeah, especially if it can stay kind of within this, right, as the bottom, and then if we use something like this. Oh no, this is horrible. This is horrible. But you see what I'm saying, right? Like, the channel, then that would be very cool. What would not be nice is if it did that, drop down thing that we just talked about, because that would not be cool. But is it possible that it could do that? Absolutely, 100% possibility. So here's kind of what I'm seeing, and I'm like, I don't know that it's going to do that, drop back down. Although it's possible, and hey, if it comes back down here, I'm buying more. That's all I'm gonna say. And not only am I buying more, but even with the same amount of money, I get more, right? So to me, I'm like, hey, I'll take it, because do I really think that it's going to go down to zero? No, I don't. Is it possible? Yes, absolutely. Is it probable? No, I don't think so. So for me, you know, even the price moved down. I'm like, all right, cool. It just means that I get more for less. That's really what it means to me. More for less. And so we're seeing the pattern. We're seeing the pattern that's been happening, right? It goes up, sideways, up, sideways, up, sideways. You can see it over the past 30 days. Let's take a look at the 90 days. Slightly different pattern, but a pattern nonetheless. You see, we have a sideways thing, and I get it. Like when I say sideways, let me get the trusty pen, uh, because I think it might be easier. When I say sideways, like this to me is sideways. Yes, it goes up and down and stuff, but the moves are so small. I mean, look at this. This will be basically like the bottom, maybe, and this will be kind of like the top, right? Um, and so I'm like, all right. And then it went down, right? It went down and then went sideways, and then went up and then went sideways again, and up and sideways and up and sideways, right? Maybe that's how it's going to go, and maybe not. We might see that you see here, and then it goes down and sideways, and then it kind of does this, and that's okay too, right? I mean, I'll take it however it goes. Again, super rough play around thing. I have no clue how it's going to turn out. Nobody does, and if anybody tells you I know exactly what it's going to do, well, they either have powers that we don't know about, most people don't know about, or they are full of it, right? And if they do have powers of nobody else in the world, then they need to get a slightly different job and get paid slightly differently. All right. So this is what we're seeing. So Bitcoin is at 12,935 and 56 cents, and slightly down for the 24 hours. ETH is at 406.42, down 1.6%. I'm not even going to worry about USDT or XRP or any of that stuff. BCH, 269.91, again slightly down. Link 1217, slightly down. BNB slightly down. So as you can see, a lot of things are slightly down, that have done really well. If we take a look at the sort of winners, look at this. FIL. Then we talked about FIL yesterday, and we said like, oh man, this puppy has dumped, and we talked about it in relation to the 7 days. Filecoin FIL is up 34.8% in 24-hour period. So that puppy has pumped really nicely. Quant is up 14.5, Ample up 5.6, well above $1. BSV 4.9, Ocean 4.6, Balance of 3.1, and then we get into the twos and ones and zeros, and then eventually go negative, as they say. On the biggest losing side of things, EGLD is down 15.1%, Rune down 8, YFI is down 6.1, Ren 5.9, and keeps on going down. There's bunch of coins, bunch of projects that are in the red, but nothing like super crazy. AGLD is the craziest of them all, in double digits at 50, negative 15%. Everything else is single digits, and not as big of a deal potentially. But I guess it's easy to talk about what's big deal, what's not big deal when your money's not in it, right? But when it is, you're like, oh man, 8% loss, that hurts. But in crypto, things move so quickly, and what was down 8% today could be up 45% tomorrow. So you just never know. You just never know. Most of this game is very speculative, but when we look at some of the reports and some of the stuff that folks are talking about, well, it looks like that one of the speculations is not Bitcoin any longer. And they're basically saying is that Bitcoin starting to behave very similarly to wine, whiskey, watches, cars, and all other beautiful, luxurious, rare things. So we're going to take a look at the report right now, right here, to really see how indeed is this sort of changing, and what is going on. So as you can see, it's a bit of a story, but I think it's going to be very, very cool. Now, not that long ago, the amount of Bitcoin sloshing through the markets was double that of the second most liquid asset, Ether. And I'm going to make this slightly smaller because it's a little bit too big for my taste. Can you see this still? Hopefully you can. Hold on. So, anyways, it used to be basically that Bitcoin was moving way more and was transacting way more than Ethereum. Well, that actually has changed. It has changed in a very, very, very big way. Sorry, y'all, but everything freaking hurts. I think I slept kind of funky. Anyways, moving on, because you're not here to hear about my sleeping patterns. And if you are, wrong show for you and I. Bitcoin's trading volume has been declining since 2018, but the price has been ticking up. And here we can see, maybe it is too small. Maybe I do need to make it at least a little bit bigger, Nev. So that, let me see, maybe I can make it a lot bigger. Yes, I can make it a lot bigger. Oh, this is beautiful. Yes. Okay. So the price has been actually ticking up, and you can kind of see right over here. This is a chart that is coming out of bitcoinity.org, and you can kind of see what is going on, the Bitcoin trading volume. And it has all these different exchanges, it looks like, right? It's kind of small, so I apologize. I'm like trying to put my face into the chart because it's kind of hard to see. But you can see that the volume has been going down. And what they're saying is that the volume has picked up on Ethereum, but not on Bitcoin. The nature and scope of this recent Bitcoin bull run looks and feels different. And we're actually getting that from a lot of the OGs, from a lot of investors, from a lot of analysts, from a lot of companies. And what we're getting a lot of is, we're getting, way back when, back in like 2016, 2017, when we had the last bull run in Bitcoin, a lot of the stuff that was coming in was individuals like you and I, right? Speculators going in, and especially as the prices started to go up and people started to talk about it on TV, masses started to kind of jump into and figure out like, okay, what's this thing Bitcoin? How do I get to it? How do I get to it? I want some. I want some. And so people will kind of get into it, but we're seeing something a little bit different right now, right? That we are seeing that large companies are starting to come in, institutional buyers are starting to come in, and unlike regular old humans, they bring in way more money, right? So that's number one. That is a key difference. Number two, that is a key difference is that they don't tend to get in and out as fast as individuals. We go in and we're like, all right, buy this, and then you see something else that gives you a better yield, and you're like, forget you, man, I'm going over there. And we saw that with DeFi this summer, right? Well, institutional investors behave a little bit differently. They don't jump from place to place with that stuff. They typically tend to park their money a little bit more. And so we're seeing that it is a little bit different. So it does look and feel different. We're also seeing, people and companies that once used to call Bitcoin a scam and like a bad thing and all kinds of bad names, are changing their tunes and are either jumping into it and investing, or are developing on it, or are doing both, or acquiring companies, or doing all of the above. So that's kind of where some of the changes are coming in. And what they're saying is that the Bitcoin is now being treated similar to the way of how investors buy and hold luxury items, which is very, very interesting thing to kind of understand and talk about, right? So so this is the kind of what we're going to be taking a look into. Bitcoin trader behavior has changed. The number of Bitcoin addresses holding more than zero point 0.1 coins is at an all-time high, and the number of addresses holding more than 100 coins is reached a 6-month high, and this is all according to the Glass node. And so if you think about, if you hold zero point 0.1 coins, right at the current price of, what is it, like, let's call it 13,000, right? So hold on, where's my trusty pen? You know how I like this stuff, man. I mean, this was like a gift from gods when it was gifted to me. So at 13,000, right? If you have zero point 0.1, come on. No, you don't want to play? All right. Zero point 0.1, that means that you have 1300. Never mind the thing that just it deleted me. Never mind the thing that just deleted me. Forget you, man. Don't like you anyways. Right? But if you have 100 coins, come on, 100 coins, right? What? Does anybody know why this thing is doing the thing? Right? Like, why are we doing that? Look, he doesn't want to play. Crazy. All right, so you have 1300. All right, never mind. I clearly, I don't know how to use simple extensions such as right on the thing. But I think you can understand that 100 coins at 13,000 is basically what, 1.3 million that currently are holding. So that's reaching a 6-month high. And they're also saying that the number of crypto whales, those holding more than 1,000 Bitcoin in their wallets, has also hit an all-time high. And we do see a Glass node metric, and here it is. So here is the number of addresses with balance of 100 or more coins, and you can see that the number is actually kind of like all-time high. Now, we did hit the super all-time high in 2017, and has been kind of going down, but it's not, it's sort of like tapering off, and as the prices kind of go up. So we did see something very interesting, right? We saw the price kind of go up, and here is the very cool historic chart that I really, really like. And this is, if you know anything about me and my sort of love for investing, you also know that I absolutely adore this thing. Let's see, maybe it's gonna let me play on this chart. I so want to play with this thing. But look at this. You see how beautiful this is? This is what we want. Right here. This guy right here is what we want. This is a check mark. Yes. That's what we want. That's what we look for when we're looking for beautiful patterns to invest in. So that's the cool piece that I think makes sense for us to look into. And, so anyways, that's a beautiful thing. But you can see right here from the Glass node that the number of wallets or the number of addresses with the balance of 100 or more is actually doing pretty well. And of course they gave us a little bit closer look into where we are with the stuff, and you can see it's starting to kind of go back on up. And then here is the number of wallets that have 1,000 or more, and as you can see, that number is up as well. And here, if you look at, oh, this is something different. This is something different. Percent of UTXO in profit, and that's actually something else that we're going to be taking a look into a moment. So we'll come back to this one when we get there. According to analytics site Glassnode, 98% of all unspent Bitcoin transaction UTXOs are currently in a state of profit, and this is the chart. Remember how I said, I'm like, oh, that's not the chart, that's not the chart. This is the chart of what they're looking at, and they're basically saying like, hey, the number is really really high of who's in profit. And not only do we have this chart, but we also have a report that says 98 of unspent Bitcoin transaction could sell for profit. And here is that basically that chart just sort of zoomed out so you can actually see it of how many people have come into that piece. And of course it has come down, come back up, so it moves and changes with, of course, with the price of Bitcoin as well. What the metric describes is that all of the Bitcoin sitting in wallets right now would sell for a profit. Well, not all, but 98% of it, right? 98% of it. That's basically what they're saying. And they're saying this is from a level not seen since December of 2017. So that's kind of what they're talking about in this particular article, right? Glassnode's metric is a roundabout way of making point that the most of the money sitting around in Bitcoin wallets could be sold for profit. So they said it, and they said it again, and then they said it again. Something I need to learn. Repeat, repeat, and then tell them one more time. But I go like, I told you once, move on. But people don't hear it the first time. Sometimes don't hear it a second time. Sometimes don't even hear it the third time. But eventually they'll pick it up. So gotta say it, say it, say it again. So I'm gonna say it. Bitcoin, Bitcoin, Bitcoin again. This has been a trend that's been maturing over several years. Grayscale noticed a market increase in the number of holders versus speculators. And Bitcoin is becoming a store of value, not a trading currency. Ethereum and Tether are becoming the currency of crypto. Ethereum blockchain is now processing more than twice the daily transaction volume of the Bitcoin blockchain. And of course, that's a lot of it has to do because of the stable coins that are built on it, the DeFi that is built on it, and all kinds of other projects that are being built on top of Ethereum. So Ethereum really is the largest kind of cryptocurrency project that is happening, that is out there in the universe of the blockchain, of the cryptocurrency universe, cryptoverse, I guess, to call it. The other piece also is that we are getting, Tether is being used heavily, but as we mentioned yesterday, in yesterday's report and yesterday's show, and if you haven't watched yesterday's show, you want to go to the YouTube channel, Money Matters, and look it up. It's going to go under crypto. You're going to be able to find it and understand that there's some challenges with China. China is starting to crack down on Tether, and so you want to be very, very careful with that stuff. We also have a new report from crypto research firm Messari on third quarter activity of DeFi and stablecoins. Has believed that current rolling 30-day average for Ethereum is around $7 billion, and Bitcoin is under $3 billion. That is huge. That is absolutely huge. And you can see where Bitcoin, orange, right, one, used to be so much higher. And then at some point this summer, it all just switched. And Ethereum has really taken off, whereas Bitcoin is basically staying flat. So if current rates hold, Ethereum is on track to see more than $1 trillion in annual transaction volume, which is a major reversal from 2019. Tether, however, isn't just the most traded stablecoin. Messari found that over the summer it grew to surpass even Bitcoin with a rolling 30-day average transaction volume of nearly $3.5 billion. But as I have mentioned, Tether is having some challenges right now with China because China is starting to crack down and does not want the digital yuan to be competed with because they're creating their own digital yuan, and Tether unfortunately has some of that stuff. So we'll see how all of that rolls out. And of course, we've seen that not only is how it's going to roll out, but also, US is having some challenges with Tether. Bitcoin outlook is becoming more of a luxury than an asset cryptocurrency de jour. Whether an asset or commodity is investment worthy, there is a stock to flow model that is being followed, And there's a really beautiful stock to flow model that was explained by an individual, a gentleman called Plan B. So that's what he goes by. I don't know his real name, but he's an institutional investment from Europe, I believe. Um, Netherlands, I think, right? So I think that's where he's coming from. So, and he really done a great job explaining a lot of things about it. But what the stock to flow model basically is you take the dividing existing supply of a commodity with the commodity's annual production growth, and you get basically this ratio. Commodities with high stock to flow ratios include gold, silver, wine, cars, watch, and yes, Bitcoin. Approximately 190,000 tons of gold has ever been minted. That would be the stock. Then every year, gold industry pulls from the ground somewhere between 2.5 and 3.2 tons, thousand tons. This is the flow. So the stock to flow ratio of gold is 59. It would take 59 years at the current rate to mine 190,000 tons of gold, meaning its value will hold really, really, really well. Bitcoin stock to flow has behaved with a high correlation to this model. And assets like this are also seen. I'm so sorry, y'all. These allergies are really not playing along today. Assets like this are also seen as a hedge against market volatility. Market watchers look at gold as a symbol of investor intent. When the markets are down, the price of gold tends to go up. When investors can't get their hands on bullion, they look to other rare assets such as wine, whiskey, watches, among other luxury items. We've also seen like rare art, cars, and that kind of stuff. So, and what they do is they basically look at things that have, they look at supply and demand, scarcity, and availability. So, if there is a small supply, right, high demand, those are rare items, and that's what investors want, and that's what they want to hold. So, according to the Knight Frank Wealth Report, the rare whiskey sector, did you even know people invested in whiskeys? I didn't. I'll be very honest. I knew about wine, I knew about art, I knew about cars, and watches, sometimes jewelry, and that kind of stuff. But I didn't know about whiskey, and I'm going, that's amazing. I mean, that's pretty cool. My problem with wine and whiskey is I probably end up drinking the whole thing. Well, like not at once, right? But so not a very good investment for me because I would drink it. But the rare whiskey sector has grown in value by 564% in the past 10 years, and it's a 5% gain this year alone. That is really, really cool. Fine art is up 141%, wine 121%, cars 194%, and watches 60%. So really, when you take this rareable kind of thing, the rare items, whiskey seems to be the best investment ever. So whiskey drinkers, rejoice, rejoice. And of course, investors are picking up the finer things and holding them because, like gold, there isn't many of these luxuries being produced, and so the value of them increases. So, of course, you wouldn't necessarily drink the stuff or eat the stuff, although food is not really being used. Although I don't know. I mean, is there a market for really fine like cheeses, aged that sort of can still continue to age? I don't know, or maybe like aged meats. I don't know. I don't know. Y'all let me know. I mean, I know that those things are very, very, very expensive, because they're also expensive to produce. But that's kind of what it's interesting piece because they look at how much of something is being produced, right? Is it being replaced? If the answer is yes, then it's easily replaced, and they were like, not interested. But if it's not easy to be replaced, then all of a sudden it becomes very, very rare, very, very popular. And that's what we're seeing some of the stuff really take off. And people with a lot of wealth, they like to diversify. Now, is all of their money in the whiskey and wine and, and watches or, fine art and that? No, it's not. They will have different things. They'll have businesses, and they'll be private investors in other businesses, and they'll hold on to some of the real estate, and they'll have some gold, and they'll have some Bitcoin, and they'll have whiskey and wine and watches and art and all these different things, but they're looking for finer things in life. So they're saying that while Bitcoin is often compared to crypto's answer to gold, this column contends that it's more akin to a rare consumer commodity than gold because of how it's managed, bought, and sold. And I think that they kind of have a good take on this thing. Supply and distribution of gold is handled by big institutions and state actors, also heavily regulated. The supply and distribution of fine art items, or fine items, not just art, like wine, watches, art, is not managed the same way. Instead, marketplace is more akin to buying and selling of the cryptocurrency. You have brokers, you have exchanges, you have buyers and sellers. Sometimes individuals, are trading amongst themselves, and it's much more fluid. And Bitcoin, are saying, is like fine wine that gets scarcer with age, and investors are loving it. So let me know how you think about this whole thing and how you like it. I really have enjoyed learning about what wealthy individuals are buying into and getting into, but B, I really have enjoyed like learning about how the whole process works when it comes to the Bitcoin, and kind of to think a little bit differently about it. Even though it's called cryptocurrency, it appears that more and more people, as they start to learn about Bitcoin, they don't see it as a currency at all. They see it more as a stable, rare, scarce asset that they basically buy and hold for forever. That's something that not necessarily used to go onto your income statement, right? Which gonna goes in and out constantly, but it goes onto your balance sheet in the asset column. And that's a pretty exciting sort of shift in a mindset that many people have, and we're seeing that as we're listening to some of the folks talk about stuff. That's the kind of exciting piece for me to take a look into. Now, we did take a look at the Glassnode charts a moment ago, and if you want, you can definitely go out there and do that. But I have recently also come across Chainalysis, the chart piece, where we can take a look at some of the stuff, and I thought it would be really cool to bring it to you all, and share this with stuff. And I can't believe I said you all, because I always say y'all. So I'm not quite sure what happened. Clearly, these allergies are preventing oxygen from entering my brain, and now I'm starting to create all kinds of crazy stuff. So here are the daily highlights. The change in BTC, which is Bitcoin, held on exchanges in the last day is 44.53 thousand BTC, the highest level in 224 days. Known illicit BTC funds placed to mixers in the last days are 1.49 BTC, the lowest level in 365 days. Wow, the entire year exactly. And the BTC total flow in the last days are 436.85 thousand BTC, the highest level in 143 days. And of course, we can always view the charts, but I want to take a look at some of the stuff, what's going on. So the price is slightly down. The inflows to exchanges down. The change in BTC held on exchanges is up. So it looks like that it's not going on to the exchange, right? I mean, it's down 32.8%, but it looks like the change in BTC held on exchanges is up because people have bought it, and it looks like they just haven't moved it out of the exchange. That's what my argument is for the whole thing, but I could be wrong. So here's the BTC inflow to exchanges. An inflow to exchange basically means I'm about to go and sell it. So here we go. This is where we are. And it's basically, it's still there, but it's down from where it was October 21st and 22nd. Today is October 25th. So we're seeing it down. It's a couple days delayed. I'm sure that maybe if I reset it, it will come back. But I also don't want to play around with it, because if I lose it, there goes the show. So maybe we'll do this when we take a look at all of the other stuff. Let me see if I can make this a little bit smaller, because there we go. Might be easier to see this way. The change in BTC held on exchanges, as you can see, it's up. It's up, and that's why I said maybe people have bought it and just haven't moved it out of the exchanges. the trade intensity, it looks like the trade intensity is like higher than it was in September, right? But not as high as it was a couple of days ago when the price really went kaboom. The price, of course, is up and going sideways. So you can see it right here as well of what we just talked about moments ago. The geography. So here is the cool part. Global Currency Adoption Index, and where is it being adopted? And this is a very cool. I thought this was a really cool thing to take a look into. As you can see right over here, I mean, look at this. Russia is just on fire right now. Russia is on fire. What else? Venezuela is on fire right now. Uh, Ukraine is on fire. Then, of course, we have the very next sort of hot areas is going to be China, India, United States. This is Kenya, South Africa, Nigeria, right, are sort of picking up parts of Europe, and then we go into Canada. And I mean, as you can see, Australia is not as hot, but I mean, definitely what's on fire, Ukraine, Russia, and Venezuela are absolutely on fire. And this is very cool because you can come in and explore your own country of where you are and what's happening in the world and in the world economy, and you really get to learn a lot about where folks are and kind of how they feel about their local currencies. I would think, I would argue, you can take the regional BTC flow. So where is Bitcoin going? And as you can see from, there's from Eastern Asia, North America, rest of the world, and Western Europe. And you will see that Eastern Asia to Eastern Asia, of course, is like ridiculously high. The money being exchanged across each other is ridiculously high. And you will notice a pattern that North America to North America, Europe to Europe is the highest, but the rest of the world to rest of the world is the highest. But here's the interesting bits to me, that when we look at the rest of the world, of course, rest of the world to rest of the world is the highest, but the very next is rest of the world to Asia. That is a very, very interesting component that I have noticed. And that's kind of, and then of course, Europe and Western Europe, and then North America is the last. North America is basically trading by itself, it looks like, uh, with a very small number going to Asia or Europe or the rest of the world, whereas the other places are kind of picking up a little bit more exchange across the borders. And it makes sense if you really think about it. Why? Well, in North America, half of the North America, if you think about it, is US. Well, what advantage does the US have? A dollar. What advantage does a dollar have in the world? Well, it's a reserved currency, so there's not as much need for it. But the rest of the world that has to deal with euro dollars, which is the offshore dollars, well, they're struggling because there's a shortage. There's a shortage there, and of course, their currencies are relying on it and the exchange and all of that stuff. So they don't want to deal with it. So of course, they get into crypto. Makes sense when you think about it. You just have to start pulling your head out of it. Demand, well, we see that the demand, there's an up on the BTC flow. The flow to fiat exchanges is down. The flow to crypto exchanges is really down. So, people are not ready to sell. They're not interested to sell. So a lot of really cool things. If you want to really geek out, this is a very, very cool thing to take a look into. This is the really interesting thing, the value, the age of held Bitcoin as of last week. And as you can see that there's a lot of Bitcoin that is being held well over a year, and the percent change obviously is on the shortest end of things. But look how amazing this is. This really lets you know that people are in this for a very, very, very long hold, liquidity and held and so on. So oh, allergies. It's okay, winter is coming, the fall will go away, the dead leaves will stop messing around with, even though I love the smell of it. So I know, right? Unrealized USD gain, BTC held. So a lot of very, very cool things that exist on markets analysis. And you can really look at what's going on. The fees are down, destination of the mining pools. I mean, like I said, a lot of things that you can really, really geek out and learn a ton of stuff when it comes to what's happening with the money and where things really, really are. So that's one of the things that I wanted to share with you. I know that I have said that I wanted to share with you stuff about the SEC changes and the crowdsourcing, crowdfunding, and that kind of stuff. Unfortunately, that is not going to be like a 5 minute thing. It's probably going to be 15 or 20 minute thing. So make sure you come back tomorrow, and I promise we're going to go do that. Of course, the only way you can come back tomorrow is if you come join us live. Which, by the way, if you are live here, welcome. We're about to go into the Q&A, so don't go anywhere. And if you're watching this elsewhere on, say, YouTube, for example, smash the like button, subscribe, hit notification stuff, and I will see you tomorrow where we're going to talk about SEC and regulations. I promise you, I have my word on that. So thank you for watching. Until next time, stay forever money blessed, and do remember, you are only one deal away.